In this video, I seek to explain why the responsibility for this crisis lands at the feet of Western governments and not the fallacy which has been commonly accepted that the crisis is the responsibility of the private sector, of greedy bankers, of runaway capitalism, the fault of unregulated markets. These are total fallacies and are categorically wrong. The responsibility for this crisis lands at the corrupting influence of Western governments. Now, the crisis is both simple and complex. On the simplistic level, I think, broadly speaking, people have correctly understood that the Western economies and Western individuals have spent too much and produced too little, and we've lived beyond our means for too long. This is correct. How and why this happened has been widely misunderstood, and I shall now explain why and what this misunderstanding is. You have to break it down into various concepts, and the first concept you have to understand is that you cannot consume something until you've produced it. If you take a man on a desert island by himself, he cannot eat or consume anything until he's produced something. He cannot eat until he's fished or gone to a tree and retrieved fruit. He cannot drink until he's retrieved water and purified it. He cannot keep warm until he's chopped wood and made a fire. Now, if onto that island materialises a bureaucrat, he cannot tax that man and retrieve resources from him until he's produced something. If he refuses to produce anything and he dies, the bureaucrat is unable to receive revenues. Once the man produces articles or resources, the bureaucrat, with the man's acquiescence, can then tax him, and then he can provide other services. The services we've commonly expected to be free from the government are education, healthcare, defence, policing. All these services we expect from our government. Now, the actual truth is nothing is free, everything is paid for. The private sector has to produce in order to be taxed, in order to divert resources to provide these services. Now, in Europe, the amount of that tax equates to 50% of what goes through the economy, and that's taken from us in income tax, which varies from, I think, between 20 and roughly 50%, employers' national insurance, which is an additional 10%, VAT, fuel duty, tobacco duty, alcohol duty. All these taxes in total add up to 50% of what runs through the economy. Now, you may argue, well, we need these services, so we have to pay for them one way or the other. That is true. They do have to be paid for one way or another. The question is, what is the most efficient way of providing these services? Now, the government is the most inefficient provider of services. There are huge numbers of examples. Just to pick a few, if you look at, for example, the Soviet motor industry, which was state-run, they produced a Fiat, which was the Lada design was a car from the 60s, which they bought from Fiat. They produced it, was an extremely low specification, low quality car. In order to sell it in the West, they had to sell it at a loss. Conversely, at the same time they're selling Ladas, Western motor manufacturers are producing ever better, ever more sophisticated products, whereas this Soviet government produced product is produced at a loss to an inferior quality and an inferior design. The same happened in the UK in telecommunications. In the 70s, the state had a monopoly over the post office. The post office had a monopoly over telecommunications, and provided you with a handset which you had to buy through the post office, which was a 1940s design again with a dial on it. And that's not to do with technology. In the 1970s, you could already get videotape recorders and colour televisions, and yet you had an archaic telephone system. As soon as it was privatised, of course, you had a myriad of potential handsets, and you had millions of providers competing for your business. And that is the primary difference between the state and private sector services. In the grocery sector, for example, you have lots of grocery stores or lots of chains of supermarkets competing for your business on both price and quality. Out of thousands of grocery stores which are in the country over the last 100 years, a handful have been the best and provided the service to the highest quality and the lowest price, and therefore become national supermarkets. In the government sector, none of this selection process goes on. Bad managers and inefficient practices continue. That's why you can have a company like Lada in the state sector still producing cars at a loss which don't really meet the optimum requirements of the customers year in, year out. Another example is in London is tube drivers. These state employees earn £40,000 a year, yet a coach driver, which is arguably a more demanding job and a more stressful job, earns less than half of that. I think it's undeniable that when government provides services, they are more expensive and of lower quality than provided in the private sector. I could go on, there are thousands of examples, but I hope I've made my point. Now the thing is that, as I said before, 50% of the economy goes through the government's goes through government, in which case you're being forced, 50% of your income, you're being forced to buy very, very expensive services. So if your healthcare costs you £300 a month rather than £70 a month, basically when you add that up, you're being impoverished or made poorer by being forced, you have no choice over it, by being forced to buy these services with 50% of your income. And the government's desire for money and the government's ability to spend money continues to grow, which is why they're always looking for more ways to make revenue. New taxes, new tariffs, parking fines, of course, is one of the most unpopular ways the government has recently, I know the last few decades, raised revenues. Now, that's all very well. So governments spend too much money, they provide poor value for money, and I hope that's a convincing argument on how that lowers your standard of living. But how does that relate to the crisis? Well, government spending has got to a point where it's not palatable. You can't, there's not the willingness or the ability to pay taxes to pay ever escalating costs of government. So the government has, since the 70s, in a greater way, resorted to print money to meet the shortfall. Now, before the 1970s, we were still on the last remnants of the gold standard. The dollar, the US dollar, the world reserve currency, was still redeemable in gold, and therefore there was a gold standard. And it's this leaving of the gold standard which is behind the current financial crisis. Now, this may seem like a very bizarre or random or unrelated occurrence, but it is the reason that we've had this terrible credit crisis. Now, international trade started off in gold before people would accept currencies. Basically, gold was the only commodity or substance universally accepted internationally for thousands of years for trade. Now, the reason for that is because it's scarce and you cannot reproduce it easily. An actual value and work goes into making it. Now, that actually balanced trade. If you imported more than you exported, you would eventually run out of gold. And if you wanted to import more, you'd have actually had to have produced services that the country you wanted to trade with actually wanted, in order to win back gold, in order to keep the trade cycle going. And this provided a natural balance to trade, and was, if you physically ran out of gold, you could no longer import it. And the only way you could win back gold was to provide services that people actually wanted in other countries in order to keep the trade cycle going. Now, in the 1970s, the US dollar had the world reserve currency, the dollar, which was still, although not fully backed by gold, was redeemable in gold. After the Vietnam War, America had busted its public finances and was about to default. It could no longer, France was asking for its dollar's reserves to be turned into gold, and Nixon realised that he was unable to do that. Now, once you remove the relationship between your currency and gold, it means you can print money in an uncontrolled fashion, which is pretty much what's happened. So the government cannot meet its liabilities, When there's no gold standard, it simply has to print money to pay its creditors. Now, you may ask, what is the problem with that? Well, the first thing is that when you print money, you have to understand there is no value behind that extra money. If you have a closed economy and there's £1 million in the economy, and you print another £1 million, you halve the value of the money. You haven't, when you print that extra money, you haven't made more assets in that economy, you haven't created more productive labour. All you've done is half the value of the money, because there's the same amount of stuff in the economy, you've doubled the money supply, therefore the money is now worth half of what it was before. So if the money's worth half, prices double. And that's what's basically been keeping government spending going. Now, the problem comes when you link that with international trade. The West has been consuming from the East far more than it's sold to the East. So, for example, the most stark example is between America and China, where America for decades has been consuming Chinese goods but not selling China as virtually anything, or definitely not goods to the value of which they've consumed. So when America continually, decade after decade, buys more from China than it sells to China, China ends up with a lot of dollars. So these huge dollar reserves cannot be spent. If China tries to change these dollars into other currencies, what happens is there'll be a lot of dollars on the market looking for conversion, and there'll be more supply of dollars than there will be for demand. Now, if there's more supply of dollars than there is demand, that will crash the value of the dollar. And if the value of the dollar crashes, then the Chinese goods become much more expensive to the Americans, therefore they cannot afford to import. So the Chinese had no interest in converting these dollars into other things. So they had masses and masses of dollar reserves, and this is true for pound reserves, euro reserves. They basically had huge reserves of foreign currencies. Now, in America, when the Chinese had these dollar reserves, they had to do something with them. And in around 2000, this found itself into the stock market, which led to the dot-com boom and bust. And more recently, and more catastrophically, it found itself into the mortgage-backed security market, which led to the housing bubble. As there was so much cheap money on the market, cheap loans led to higher housing prices. It also found itself into consumer credit. Now, if the gold standard had been in place, these imbalances simply would not have been possible. If America had consumed up to a point of Chinese goods, they simply would have run out of gold and they could no longer import, and they'd have had to have produced services that the Chinese wanted in order to win back the gold, in order to continue to trade with them. Now, this is basically how the government has corrupted the money system. By removing this time-honoured system which works, this system that has worked for thousands of years, and severing the connection between money and gold, it has allowed this huge oversupply of money and massive imbalances to build up. Without that, there would not have been the huge sums of money which the bankers played with. There would not have been the huge amounts of money in the mortgage market. There would not have been this huge amount of money in the stock market. Without this corruption of the financial system by government in order to continually expand its size and its spending, this financial crisis would not have happened.